Welcome to DevReady Podcast, where we're helping non-techs build better tech. Today we have Mark Milanese joining us from OneLenz. Mark, thanks for joining us.
Thanks for having me, guys. Yeah, it's awesome to be here. I mean, as I said, I'm in Melbourne still, so I'm in lockdown. So
yes,
the best we can do is a Zoom meeting for now.
Yeah, we're not far from each other, just in surrounding suburbs away from each other, but yeah, all stuck in different rooms. But unfortunately, that's the world we're in right now. So OneLenz, Mark, tell us a little about OneLenz, how you actually started it, got involved, and what was the process and thinking behind it?
Yeah, so I came back to Melbourne and wanted to see where to get into and how to get into what was the next adventure. So I landed in a startup bootcamp, actually. So the team out there, Trevor and Brian, got into their fintech program as an entrepreneur in residence. And then from there, we had an idea bubbling away early 2019, really, but just hadn't had the time to get the tech and get the team together. So as I mentioned, when I came back into the startup bootcamp, met a few decent startups that we thought that we could help within Australia and beyond into APAC. And one of the themes we were getting through a lot of these startups as part of the program was, do you have any investors for us, or do you know your networks who will invest in the company? And having gone through that program, it was then, okay, what's next? So that they go through an awesome accelerator, and then they're ready, to propel to that next stage. So we started building out the tech for this OneLenz platform. And what it is, it was the rationale behind it was born to save us flicking emails to people or to investors.
Yeah, cool. Mm-hmm.
Yeah, with them out pretty much saying, have you even bothered looking at half these decks? So we wanted to create that whole ecosystem about bringing startups, venture capital investors together in a digital environment.
Okay. It's like a community for them online and an easier way to get information between them, I'm guessing.
Yeah, exactly right. And look, it started out just with our ecosystem, our networks. Obviously, as you guys know, minimal viable products. So you get the technology up there. We get feedback from the startups and feedback from obviously some of the VCs we've got on the platform. And then that just evolved. So when that was building, we actually were in Singapore at the time with, you guys know, Paul Kang, and we decided to get a bit of publicity. Being the Aussies from Australia there for FinTech Week, we decided to host an event there. I think it was on the Monday of the Singapore FinTech Festival. And that was pretty much our soft launch to get corporates, governments and VCs along with startups together and just giving a lot of these startups opportunities that they probably wouldn't usually get, like to sit with a VC and have a coffee or have a beer with them in a casual environment without that heavy pitch.
So in reality, you're a startup helping startups get access to funding through a platform.
The platform, you would say, is a startup in a sense, but our team and networks aren't essentially startups. They've either built companies, exited, worked in the corporate landscape. A couple of our board are VCs themselves, so they own funds out of London.
Okay.
So it's a good mix of people, and a few of them have either worked or led startup accelerator programs across APAC.
Yeah, nice. So that board, that team, how did you go about building that? Because in reality, building a startup is all about team and people. So how did you approach that? Where did you find your network? What did you do to build that network?
Yeah, that's an awesome question. And that's probably the biggest tip for any startup out there. From most of the VCs we know, they'll look at teams, who is your team top down? So obviously you need solid founders, and then you build your idea and your concept around your team. So we went out, obviously I met Paul Kang, who's, we're pretty close friends now, pitched the idea to him, obviously at a bar or a few bars. I think it was the Intersect Festival in Australia through FinTech Australia. And then that just grew momentum. So we expanded the team from people who I've worked with at NAB before. And then when we were in Singapore, we connected with a group of people that we knew from a while ago, but wanted to work together, but didn't know how. Again, pitched this idea, and this is how we brought the team together. Now, I think that the key thing for teams, we took 6 months to build our our entire team. So we've grown to about 12 of us, and that took 6 months to vet us all. A few people dropped off, which is natural. There are different cycles of their journey. That's fine. But yeah, it took us a good 6 months to find the right people that you can connect with, you can work together and share that journey together. So
that's how I want to rush into that. Yeah, it's a good tip there. So I think, take your time finding the right people to connect with and collaborate with.
Yeah, so that was our core team. And we based our core team around, as I said, myself, Paul Kang, Wadir Katrib. So Wadir, we, funnily enough, met at Intersect through Paul. So okay. I think things like Intersect, which is run by FinTech Australia, you get to spend the whole week with people. So, and it's not only in the day, it's at night, it's dinners, it's bars, it's coffees. So you really can connect to share. So as we mentioned, Paul, Wadir and myself just hit it off, and yeah, from there we've evolved and just brought more on.
That sounds really good. So what type of experience? You mentioned there's some VCs in the team, there's some consultants in the team. Obviously, Paul runs a security organisation from a security perspective. What sort of, are you covering all bases within the Starker ecosystem, or?
Yeah, that's a good question. So we've got, obviously, one of the partners or the three main partners is Wadir. So Wadir runs his own consulting business and heavily focusing in channel and distribution and sales. And we think that's a real key point for a startup. They all want to chase funding, but you need to actually chase clients, to get that traction. So
prove your idea before you get an investor in there.
Yeah, exactly. So Wadir heads that up for us. He also keeps Paul and I in check because, Paul won't mind me saying this. We go on our own journey sometimes. You need someone, I think, grounded and solid to actually say, well, guys, we know we can work on everything, but what are we going to focus on? So Wadir brings that level of, seniority and experience from like an exec level. Obviously, you mentioned Paul Kang, so Entersoft Security. So he's your startup founder that's spent years across Southeast Asia growing that. And obviously he's the board director of FinTech Australia. So that was our team. And then from there, as I mentioned, some project directors, ex-NAB. So, understanding tech concepts, bringing them to market, scaling teams. And then from the other angle, we've got venture capitalists from London. So they run their own fund. We have ex-Plug and Play head of Asia, part of the team, an ex-managing director of Supercharger Hong Kong, they're really heavily focused in product. Another one of the team is your ex-management consultant in corporate, so Deloitte, Goldman's, M&A type experience. We're fortunate enough to have our board member who's runs a fairly decent-sized law firm out of Australia and has a M&A boutique investment bank tied into it in Asia Pacific. So we've got all
there.
Covering quite a few angles.
Yeah, quite a few bases there. Definitely.
All-encompassing team.
Yeah, and I think it just plugs those gaps for any startups. Like, what elements are we missing where if a founder comes to us for advice or help, we've got it all covered. But the second point is that networks, because if most of us spends either in a startup, entrepreneurial journey, corporates, so we've got most of those bases covered so we can understand the journey from a founder, because it's tough doing a startup, From an idea on a PowerPoint to, 2 years later, should we keep going or not? It's
not an easy journey. Yes, it is. So
the story is
massive learning. No, it's a journey that we jump in. So obviously, our journey a little bit, but building business it's a learning experience. And I think, from the past few years for us, it's all about how you can connect, and network's pivotal. So if you're growing network and the people around you, it just expedites everything. So OneLenz and bringing those people together makes a lot of sense to me.
Yeah, and that's what it is. It's how we're going to help fast track via our own experience or our own networks.
Mm-hmm. So let's pair it all apart and have a look at what you do for a founder themselves. So obviously help them generate some VC, maybe some funding, but you also mentioned a bit about sales, so helping from that perspective. So is it a mentoring thing? Where do you start if a founder comes to you?
What's the offering that they get?
Mm-hmm. Yeah, that's a good point. So we run certain pitch nights to actually give them a bit of marketing and exposure.
Yep.
We also invest in some of the companies ourselves. So some of the companies where we see a a value proposition, we know we can expand them through our networks. We'll, invest in them, get a bit of equity, and then scale them through our networks, whether it be, in your fintechs, which we're all pretty heavily involved in. We've got a data company that it's a data cleansing company, so we're actually scaling that through, either through Australia or via Singapore. Half our team's based in Singapore and half's in Australia.
Mm-hmm. So there's a bit of a mix there, definitely. So I'm a founder, I'm beginning the journey. What do you recommend you do? Do you look at building team first or product first? Where do you start?
Yeah, that's a good question. It depends on your tech skills, because what you find in the market, obviously, is you've either got this PowerPoint and then you got a lot of people coming in to say, okay, where do I start with the tech? Or you've got it the other way around, heavily focused tech founders, but not sure how to get it to the market. So I think there needs to be, and you guys are well aware of this, a healthy balance between a business mindset and a tech mindset, but then tying in that product and user experience.
So for those non-tech founders, how would you suggest they then take their idea from the presentation to something like a prototype or an MVP to get it in front of people? Because I'm sure the presentations are going to get you to a certain point until you start putting rubber on the road. Yeah,
look, there's a few ways. Speak to guys like you.
That'll do it for sure.
That's the easiest one, and that's where we've built out networks. Like, we've got a few companies we work with to say, hey, have a look at these. And most people, being the startup community, spend that hour or two to workshop and say, okay, this is what you need to do. Do you want to get a local dev team? Do you want an offshore dev team? If you've got an offshore dev team, there's risks. So you'll need a CTO or local delivery manager to actually oversee the product, because sometimes we all think about it, it's cheaper, but if you can't manage it, you're just going to do rework.
Doesn't matter how, And you look at the hourly rate. If you can't manage it, we've seen those before.
Yeah, it's cheaper per hour, but it's 10 times the hours.
Yeah, exactly. And then sometimes you never get a result, which is the disappointing part. This is the reason why we started the podcast. It was October last year. It was about a week apart. We had 5 founders come to us, and over the course of that week or so, they basically said they blew over $1 million together building product that never worked.
Yeah, they were non-tech, couldn't manage the delivery of it and get the team running smoothly the way they needed it. The communication was a problem because they didn't understand tech, so they couldn't explain to them in ways that they would understand to deliver the product they wanted. So they just had the teams that weren't right fit, really.
Oh, it was just frustrating to see that, because they all had great ideas, but then they blew their budget and then they just had no return from there. So other than going to find more money, but it's hard to find money after you blow 200, 300, 400 grand on a product. Investors may not trust your execution at that point.
Yeah, and that's exactly right. I think where many of them, probably need a bit more guidance is making sure the requirements are right. Because, obviously project management background, and you guys did background as well in project management, you actually say, okay, we've got this concept, but where are the requirements that underpin that to exactly be specific what you want and what you're going to achieve? And then that I think is pivotal to the end result and saving the money.
Yeah, and focusing on those throughout the journey, really, of the development. So you can always pull it back if it starts diverging, unless it's a pivot.
I think you're right with that as well, because, it's all being founders. When you build a product, you want everything perfect, everything ready. You want to build, your end product. But half these companies that they look up to, they've gone through 3 rounds of funding and they've got big dev teams, but get a minimal viable product, get it to the market, test it. It doesn't have to be perfect. You get the feedback, and then, you'll probably get funding off the back of that, traction, and then build your perfect version. But coming back into what your team does, you got to make sure the underlying architecture is ready to scale. And, you guys can explain a lot more about that than what I can, but.
Yeah. If it's not built right from the beginning, it's like a house foundation. You can't build a 3-story house if you haven't built the foundation to support it. You can't just say, just move the bathroom from this corner of the house to the other corner of the house, because the plumbing's not there. You have to tear up the slab and start again. Like, it's the same concept. It has to be planned right from the beginning.
I think there's a couple of options there. So you can go on, provided that you plan for this, you can build an MVP that you're going to scrap. That's one option. You know that it's using maybe different technology out there, pulling some pieces together and just showing an outcome that's one option. It's definitely an option some people take because it's less intensive. Also, can be a little bit less risk where you know that that's the outcome that you're looking for just to get you to the next phase. But that's a funding game too. I find that people just build for funding, not for actually serving customers. And that's a fine balance there. So do you build a product that you can scale upon, or do you build a product that you scrap and move later? It's probably a question for you because I prefer to build a product you can build upon, but it's more investment into architecture. But what do you recommend there, Mark?
Yeah, I think it depends on what's their strategy. Like, I'm sure we've all seen, I think, what was a show in Silicon Valley that it's, whatever you do, don't make money. But unfortunately, if you haven't got that big check, you still need that traction. Traction is whether getting on procurement panels, whether it's been, getting those first 1,000 clients, something that's going to show that there's a market for your product. So probably to your question, it depends on how deep's your pocket, but why not build on solid foundations of architecture and choose your architectural strategy because it's going to be cheaper in the long run.
Yep. Oh, it is, yeah, because if you're looking at just funding it through the process, it gets more expensive because you're scrapping product. You can go spend $100,000 on an MVP. You're scrapping product, scrapping investment, and you need the next round to move. So that's a little bit dangerous there. So you want to be proving outcome.
There'll always be like a version 2 of the product. It just depends how soon you want that to come around.
Yeah, exactly right. And look, we went through the same with our platform. Like, got that many features I want on there, but it's when the timing's right because there's too much to do as it is.
Just to touch back a bit on we were talking about like the products and MVPs to help you guide that decision whether you build something now and it's going to be scrapped as soon as you get more funding to build the proper platform. Is that something you would advise people to sort of bring on an advisor or like a tech co-founder to help them make that decision? It's not something a non-techie can make on their own, I don't think.
Yeah, I think either or. Probably a technical co-founder. If not, spend the first bit of money, employ, have a workshop again with guys like you to say, what are our tech options, and whatever that first workshop's going to cost is going to save you that much more money in the long run. So it definitely, after you've got your concept, go speak to a few technical people and work out what's your tech strategy, because some of the strategy might be for an MVP to test the market is to get something off the shelf and put some customers through it.
Mm-hmm.
And then
that can be.
Yeah, we had an episode a couple of weeks ago with Ann Mills, Andrew. Mm-hmm. She built a platform. It didn't work, and then she just did everything by hand, and she's still doing it by hand 3 years later. So she's got like a face of the platform and then doing manual matching rather than having automated matching through her system. So she's proved the concept with off the shelf effectively just using a phone.
Yeah, and that could work. Depends on the actual business and the business model, and it's whether if that market you win needs a tangible IP for the company to be worth more, or if it's just could be a marketing product play where your investors in that or how you make money, they don't really care about the tech. They care about your scale, and if you're making money that's not related to IP value of the company, that might be a good answer or solution. So I guess it ties back into what's your business model, how big do you want to go? Like some companies might just want to stick to a Melbourne or Victoria location. So or some people say, no, I've got big plans to scale through APAC or the US or UK. So then obviously you're going to prepare for that. But if you're just building something simple that it's going to run across Victoria or Australia, you might not need that heavy tech solution. So again, I suppose it depends on the product and the company.
Yeah. With that one there, I think that's an interesting point. So how do you find dealing with startup founders that want to take things globally compared to people that keep things just locally? Is it just a mindset thing, or is it generally just their limiting thoughts on how the product could serve the global economy?
Yeah, it's a good question. I think it's a bit of both. Like some founders are comfortable to be, in a certain area, and they've got no plans of going overseas. It could be, the heavy workloads involved going through next rounds of funding and having that 5-year journey, or it could be that they've got, family commitments and you can't really travel overseas as much because, setting up overseas is is a big commitment, obviously. And even if you get, teams overseas for you and you pay them, you're still on the phone 24/7.
In the US, you're up at night, on the phones. It's very different markets when you're standing. Different time zones you have to manage, right?
Yeah, that's the thing. You don't, half the time you don't know what time zone you're in. So it depends if you do want that work-life balance or you actually want to go scale globally.
So with that scaling globally question, what type of founder do you generally find wants to do that? So what's the difference between the two? What sort of attributes do they have?
I suppose obviously ambitious, relentless, resilient. Sometimes you would say, stupidity, I would say, craziness. Because we all a bit are in this space, especially when you say, I'm going to hop on a plane and go overseas and, try your luck. It's so you've got risks. Some people are more calculated risks and some people just say, I'll go overseas and try.
Yeah. Yep. I think there's nothing to lose, but with the right people and the right guidance, it can be a lot easier. Just doing it on your own, attempting to do some of this stuff can be challenging. So I think, what you're putting together at OneLenz makes a lot of sense for people that even want to commercialize overseas, because you've got those people in the ground throughout Asia as well. And I think that's a massive plus as to what you're doing there.
One of the offerings you said that you help people get to scale, or you scale through your networks and get that customer base. Do you find that some of the startups don't understand their customer at the start and you have to help them narrow that lens down?
Yeah, exactly. I think it's not only the customer, it's sometimes which segment they want to play. Because sometimes I'll say we're building for everything, but it's like, well, why don't you stick to 2 or 3 segments and then expand to different areas of the market. But I think you're right in that aspect, and it's just probably understanding what their value prop is a lot of times to the customer. Some companies we've found they'll go in and speak all about the latest and greatest tech that they're running, and some of the times the end customer just says, well, how am I going to benefit? How are my customers going to benefit? What problem are you solving? And that's typically like in the enterprise sales solution, which obviously you guys play heavily in as well.
Mm-hmm. I love that question. What problem are you solving? Because it can be a challenging question for people sometimes when they're building a product and they don't really know. So I've had these conversations with people and they say, we're building this tech. It does this, and this. Okay, but what's the point? Who's going to want to buy it? And is there enough of an appetite for people to actually spend money on this thing? Sometimes it falls a little bit short. Have you found that in the space you're in a little bit in terms of people just build tech for the sake of building tech?
Yeah, look, I think people have got an idea or burning ambition that they want to, try and go out there and prove it. And as we know, a lot of startups, unfortunately, don't work. A lot of them, do fail, and it's hard on the founders. But I think it gives them the lessons for a lot of their next projects. Like, a lot of good entrepreneurs have failed because they picked the learning up. But I think the point is you got to learn how to fail fast. Fail fast, learn, move on. Because if you keep, I think, dwelling on the past, you're never going to get, move forward with it. But having said that, if a lot of people have put in their own cash and commitment, it is, it can be tough.
Yeah. It's how much do you want to keep pushing, and what's that investment worth to you?
It's an interesting one because I find that we're startup founders as well, but just don't feel like one anymore. But yeah, being in that world, it's like, you make decisions in the past and you got to move on because you make decisions at the time that you thought were the best way to move forward. And sometimes they're not when you look back and you think, but I learned so much from them. So yeah, that learning and evolving is pivotal. And I think one thing you mentioned there is just pick an industry or a vertical and stick to that. Don't try and be everything to everyone. It just doesn't work. I think in our past, we made those mistakes trying to be everything to everyone. And you learn by picking a vertical. You can understand your customer a hell of a lot better. And you actually get to understand what their problems are, because from the outside looking in, we can imagine what problems are within industries or within sectors. But yeah, until you really get to know your customers and even start working with some, especially if you've got an MVP rolling out, working with your customers, you get some great feedback and then you can find additional problems that you can be solving.
Yeah, exactly right. And then I think the other key point of it is your networks you meet along the way. They're probably the most valuable asset to any founder or any company, to have those networks to be able to pick up a phone, bounce ideas or get that meeting. That's probably one of the biggest key things for any founder is make sure you've got solid networks, or people, if you bring in on board members that very well connected to actually get you in places or fast track that meeting.
Mm-hmm. It's about who you know, what you know. So most of the time that's what I found during our journey as well. So Mark, let's dig in a little bit. If I'm a founder, what do I need to pitch to an investor? What should I be doing to get ready for that conversation? What do I have to have prepared, basically?
Yeah, look, I think it depends what stage you're at on your life cycle. So if it's your first round where you got a pitch deck and for some reason every pitch deck and every founder at the start thinks their companies are worth $2.5 million. That's our general thing. Yeah, I've got a $2.5 million idea, and half the time with no tech build.
Okay. So how do you value an idea, Mark?
Yeah, that's it.
That's all my ideas.
Let's get a few PowerPoints going for you.
Yeah, that's good.
Well, look, I think the first round, which we've found a lot, is getting that first round, like your friend, family, full round to actually back you, and whether it's that first 100K in the bank account to actually say, okay, now I got a bit of my own money in there, which is a bit of hurt money. Got some people who have bought the concept. Now let's actually go build that idea. And then from there, obviously, build out your tech, build out a bit of traction, then go through your next funding round. And your next rounds, you go, through maybe your angel round and get a bit more traction. Usually you go through, obviously about 12-month runway. So you've got, use your journey up and down, etc., pivots, whatever you need to do. And then the next one is obviously going to your more sophisticated investors.
Mm-hmm. So by that point, so talking to a sophisticated investor, what should I have in place? Where should I be on that journey? Because that's not the first conversation, clearly. What should I have?
Well, look, we tend to think you should be on their radar a good 6 months out, because especially the more, the VC funds, they'll technically want to know you. They'll want to see your journey in 6 months. It can happen, but it's rare that, a VC would say, love your idea, a month later, cash in. At the early stage, it's rare. It does happen. But, yeah, I think obviously you need your deck. You need all your due diligence stuff sorted out so you're ready to go. You need your solid team in place. Most of the time, again, if you've got technology claims, obviously they're going to do due diligence on your tech. Obviously they'll check all your legals, they'll check your accounting, so have all your accounts in order. They've got their checklist ready to go, and if someone's going to write a big check, they're going to run right through you, and so they should.
Yeah, clearly. Yep. That's their money they're handing over.
They need to protect themselves.
Correct. Yeah. They want to be a smart investor, not just throw money at willy-nilly at anybody. Yeah, I think, especially when you get that sophisticated level and big money on the table, yeah, they're going to do their due diligence, and they have to.
And I think another point is there's some, funds in Australia and Singapore and beyond that. Some of them sit with 1,200 people a year, some 3,000 people. So how are you going to stand out and justify your unique selling proposition or your product, or why you're different? Why should they invest? So, 1,200 meetings, or that's a lot of coffees, or that's a lot. How are you going to stick out?
Mm-hmm.
And it is hard. So I think you've just got to be able to pitch right, justify yourself. And that's why if you're early, some of these programs, as I mentioned before, our friends at Startup Bootcamp, for example, they really hone that in. What's your product? What are you selling? Get them to really pitch, and constantly practice that pitch. So there are good opportunities for some of these companies wanting to either scale and get into new markets, or wanting to validate their concepts, or to actually get something into the marketplace. There's a few of them around obviously now, but I think there's some better ones out there. As I mentioned, the guys at Startup Bootcamp are great at what they do. And the second point is a lot of their focus, they'll try to get your POCs into corporates, and then the corporates will help validate your idea alongside of you, rather than, that doesn't fit us, next. They'll help shape how they can get your product into their company.
Okay. That obviously helps with the evolution of the product as well, because generally products aren't perfect. So yeah, we're always evolving and pivoting and iterating. So I think that makes a lot of sense.
Yeah, and look, I think on that, a lot of the corporates we're speaking to, their innovation arms are actually trying to fast track startups getting into the corporate, because, as we all know, that sometimes it can take 9 to 12 months by the time you go through legal, by the time you go through tech audits, procurement. 9 months for a startup, sometimes they won't be around. If they're waiting for that contract or that check, they can fold in that 9 months. But if they get the quickest point to a yes, well, then they're already in and they can scale and go to get more customers off it.
So that timing definitely makes a difference, especially when you're bootstrapping effectively.
Yeah, exactly right.
I like to run a startup on the back of customer revenue. I think that's probably, it's a hard yards, but it proves your product. And if you can do that rather than just chasing the funding, I think, there's a point where you're going to need some funding. Clearly, it depends how you do that is probably the question mark. But I'd rather chase sales than chase investors' money if I can. That's my opinion on it.
It'll probably turn into a larger investment if you have the sales on the board and the track record there to back you up anyway.
Correct. And then you can prove a product, provided you can keep that runway moving and keep evolving product. Because there becomes a time where, if you're not making any sales and you want to do iteration on product, there's no funding to do it. So been there, done that too, where you're just waiting for that next sale to keep evolving product. So it's a two-pronged approach, or what the best approach is really.
Yeah, look, and I think, as I said before, one of our partners with you is a massive advocate of that is let's get your value prop ready. Let's spend a lot more time getting you into a customer, a client, because obviously for a founder at the start, you split. If you're heavily chasing funds, that's a full-time job. And then building a product, as you know, is a full-time job. And then building value props or trying to get into corporates, that's another full-time job. So if you haven't got the team to go through it, why not, try to chase the client and then worry about funding a bit later if you got enough to, keep the lights on. But Wadier's a massive advocate with the companies we work with, get the customers, get money, and then you're not reliant on, receiving any money. You'll have a pick of the investors that you want to invest in the company and more on your terms.
Yeah, so that's more of a way to potentially being able to stand out.
Yeah. If you're making sales, it makes it a bit less risky for the investor to put his money down for an idea and a piece of tech that hasn't hit a customer yet.
I think one of our other episodes, I just remember the quote, it was you have to be able to sell it yourself to your customers before you can sell it to an investor.
Mm-hmm.
Yeah, that's exactly right. And look, that's what we've gone through as well. That if you can actually, the more traction and the longer you can hold out because you're self-funded, well, obviously the more you can justify your value, or the more the value of your company is going to go up, and the more you can pick and choose. If you've got money in the bank, you can say, I don't need to invest until I want.
Yeah. I think that's a pretty powerful place to be if you can get there, because it's not that easy to get there either.
Exactly.
If you're building off the back of your bootstrapping and you're doing it for years, it takes a lot of hard yards to get there. But if you can, I think we've had this chat, like you're creating revenue. If you had to hit break even, you're laughing basically, because you don't need the cash. Only you need cash to scale, which is a very different conversation than I need cash to build a product.
Yeah, exactly.
You're trying to get to that next level, then not the first level.
Yeah, exactly. And I think it's the drive and how hard some founders want to actually chase it.
Mm-hmm. Yeah, it's an interesting one, isn't it? So it depends on which seat you come from as a founder.
Would you see urgency comes into that, where some founders just want everything done as quick as possible, and then that's why they just chase funding first?
I think both from sales and funding. You've got some founders that are just more, I think, relaxed, and as it evolves. But then you've got certain founders that are just relentless. When I was part of Evolve, we'll book in flights at 9, 10 at night, hopping on a 2:00 flight and going to Singapore for a meeting. Having that face-to-face element rather than, obviously now the times have changed with Zoom, where people are, I think, more accustomed to Zoom now. So that's been one benefit of it. Whereas before it was being face-to-face, getting to know who your customers are, what they want, and it was easier to sell into that being in front of them. Mm-hmm. I think now, though, obviously with the environment we're in, it's been accepted a lot, and it has to, and a lot more people are contactable. I'm not sure about you guys, but now everyone seems to want to have a Zoom call or get on Google or pick up the phone, because it's just like,
You've got no other option. Otherwise, you're stuck in your four walls. Yeah. So everyone's reaching out.
Everyone's
right?
just used to it now and understands the value of having those
Yeah.
that service to them. Where before it was, we can meet in person. This is just taking some element away, but not giving the same value. But it actually is providing the same value.
Exactly right. And then you factor in a lot of them, especially a lot of the people in corporates who, if you're trying to sell into them, by the time they, go to and from work, by the time they go out for their coffees and you meet them as well and come back, half your day's gone, and then you actually got to go home or to the office to actually do the work. Now you're finding a lot of, the corporates obviously at home, so they've got time to take the call, and they're actually happy to talk to people.
Yeah, there's a lot more meetings, I think, happening now simply because that travel time's been cut out. I think those first 2 weeks we started working from home, it was like 5 hours back-to-back meetings. We thought, we can do back-to-back, and then we realized what that meant.
Let's just ease it off a little bit because you don't have to smash everything in one day because, it's pretty – I think everyone's been adjusting.
Used to try and have all our meetings would be on like a Tuesday and Wednesday. But we'd factor half an hour travel in between so you'd have a break.
Yep.
We had the same mentality on Zoom, but there was no break. It was leave one room, click the next button, you're in the next meeting.
That's a fair point. I think we went through that yesterday, Andrew. I think Paul had 4 or 5 meetings back to back, and it's like, well, you still need that break. You need a reset. You've got to take notes. You've got to understand. I think it's about as well mentally preparing for that next meeting.
Yeah.
It's like being late to whether it be corporate or a VC meeting. If you're late, your mindset's not there because you're too focused on being late or, you're flustered in traffic, whatever it is. So I think preparing for that meeting is important as well.
Yeah.
So there's obviously been an impact on meetings, but in the scheme of investing, what does it all mean? Obviously, COVID's a lot of unknowns across the globe. Are investors a little bit more holding on to their cash right now, or are they looking for opportunity? Where do you see it? How do you see it playing out over the next, 12, 18 months? Obviously, there's a lot of unknowns there, but what are you seeing from your network that's basically talking about investing and are we going tech play? What are they doing?
Yeah, it's a really good point. And we had one of our board, again, Arsene, wrote a really good piece here a few months ago. So what we found was at the start, it was a lot of the VCs was trying to understand where the risk is with their own portfolio, like at the very early stage of COVID.
Mm-hmm.
How much capital do they need to be propped up? What's their risk exposure? Especially the verticals that some of them were in. And then as that evolved and that sort of stabilized, we started to find, new verticals for them to invest in and then them starting to be a bit more active. So if we look at, just recently there's a couple of good purchases or investments in the fintech space. So we're finding that's heating up again. We're finding some fintechs won't survive and have gone down into some of the neobanks, but some of them have thrived and some of them are getting more funding. Insurance tech's another massive player that we're finding a lot of investment. Obviously, digital marketing, ed tech's gone massive. Health tech again. Mm-hmm. So we're starting to find there's certain pockets that are really getting funded. If we look at some of our friends at Comply Advantage, they just got a Series C round just closed the other day for $50 million. So that was all over. Yeah, that was all over LinkedIn. So there's some still big deals, but I think obviously the investors are just reevaluating and then trying to understand where they want to put their cash in.
Mm-hmm. Yep. So you've got a couple of key areas to look at.
Area for you.
Yeah, having said that, I think some of the earlier rounds investors did dry up a little bit because obviously some of some mates, for example, property developers throwing some cash into some earlier stage startups. When they had to reevaluate what's happening with their own company, they've pulled back because that's not their full-time job. They're into property.
Take the risk off the plate and just let it go for the moment until things settle down.
Their own investments from their own businesses or like their super or stuff, they need to just make sure they've got that moving forward rather than potentially losing it. Yeah,
exactly. And then they had to get extra capital to put into their own projects to keep them and make sure they got across the line, especially at the really early stage. So that's where we've seen there was a bit more of an impact.
Okay. Yeah, so the early stage. I think, the early stage money is the high risk, right? So in times of economic downturn, people, don't want to take too much risk, right? If it's a proven product making revenue and it's growing through COVID, because there are businesses that are, that's going to make a lot more sense to put your money there than it is to put it in something that's going the other way.
Yeah, exactly right. Exactly. And from what I hear too, a lot of these companies, especially corporates, are getting projects that would have taken 9 months off the ground in 2 or 3 weeks, I've heard. So they're actually, getting startups and companies through to solve a problem that they need to solve right there and now.
There's a bit more of an appetite, isn't there? Yeah, because there's, especially how we're all out of the office, I think that's been the biggest real kick up the arse for everybody.
Yeah,
it's like,
definitely.
What do we do? Like one of our corporate clients, they basically spent a month digitizing the way they connect to the business. They pulled out all their servers and infrastructure, put it all on the cloud, and they got it done in a month. It would have taken them probably 2 years otherwise. So there's just the urgency all of a sudden because it's a must.
Yeah, there's more value
nice to
in
have
it now and quicker.
Correct. Well, you have to at this current climate. So mindset shifted just to get the current climate through this, but I think there's investing in areas that can help them now. But I'm not, especially in the corporate world. What are you seeing the investing that might help in the 2 year time? Is that slowing, or is it just the now that people are focusing on?
Oh, people are still, from what we're finding, that they're opening up their books to invest in the future, like obviously emerging techs. So we're finding they're still looking at those companies, but they're just vetting them a bit differently now. So there's a few deals that we know have gone through recently through our own networks. But they're still playing the long game. So I think where a lot of people panic as well is VCs generally play all the larger ones, the 5 to 7 year, fund cycle. So they're in it for the longer
game.
Yeah. So there's some good buying opportunities for them in this market.
Yeah, definitely. You can get a little bit less multiples in the current market, that's for sure, in terms of their investment dollars.
Yeah, exactly right.
Yeah,
exactly. And we've known a few companies that were preparing for a big, decent raise prior to COVID. They had a lot of the checks on the table, but when COVID hit and the investors pulled the brakes, obviously they needed that runway. So then they were in a different position. They had to lower their val, and 3 months later they got the money, but the val was more favourable for the VC.
And so that's the climate we're in, unfortunately. It's not going to favour where the startup. We're not in a burning economy right now, and there's a lot of risk out there. So unknown. It's a more unknown uncertainty. Yeah. That's when things slow down, right? So, I think it's a good place for an investor or someone that's got cash on the side, ready to put it into a market that could, turn at any moment. I think that's probably, where we are at the moment.
Yeah, it's an interesting space, and I think, especially in Australia, we'll see where we are the next, 3 months.
We will.
It's good to see, Brisbane opening up. I know they've been pretty active up there, and obviously WA, South Australia's open, so we're starting to kick off. So let's see.
We're in a lucky state, Melbourne, locked away. You have to wear masks outside, but I think we've got to do what we've got to do, and hopefully it starts turning in the other direction pretty soon. Because numbers still seem to be growing a little bit. Yeah,
exactly, and obviously we're in a middle of winter here, so hopefully that we push through that soon.
Yeah, we're coming to August now, so still a bit more of winter left, but we're getting there, which is nice.
If we were locked down, it's probably the best time to do it, though.
Oh, no, it's perfect. I don't have to go outside and freeze, and we stay inside in a nice warm house, and it is the best time to do it.
Yeah, exactly.
So, Mark, that's been a great conversation, just talking about investing and what a tech startup and a founder could be doing. Just the key takeaways from your journey and your experience. Obviously, you've been involved in startups yourself. You've put together different technology businesses. What are some of the tips you'd go back to Mark that was starting this journey years ago and say to Mark, make sure you tick this off before you jump into a venture? What are some of those things that you might just say, Mark, let's tick this off before we jump into anything?
I would think at the start it would be stay in your job as long as you can. Like I was at coming, I was at the NAB, it's a secure job, and then I went into the consulting world. So obviously the cash is awesome. And then I think it's probably understanding it's going to take a lot longer than what you think. And you guys even know too, like some founders think, we'll build this tech in 12 weeks. Reality, it's 6 months. And so I think it's better understanding your schedule and, how long it's going to take. And if you can stay earning cash flow in a role, and then while you're building your tech And then there's a point where you say, okay, now I need to actually go full time on this, because the investor, will want you to be full time on your project, obviously. That's what I think. I think the main thing will be your timing.
Mm-hmm. Okay. I was reading an interesting quote today on LinkedIn. They basically said, if you work out your numbers and you basically work out, I think we get a bit carried away with our estimated sales. So what he said was, yes, if you can half your sales and double your costs and you can still break even, that's maybe worth exploring, because sometimes we underestimate what it's going to cost us, and time's one of those things. It's a big factor. But then sales is another thing. Yeah, we'll get 10 million users in 5 minutes. It just doesn't happen that way.
Yeah, I think that's exactly 100% right with what you said there. Especially, I think if you're selling enterprise, you've got to allocate. It's going to take a long, long time. Like we've sold into a few corporates. Yeah, it took 9 months, and we were like, that was
9 months is good.
They came back to us and they said, at the time, this was a few years ago, they came back and said, I can't believe we got you in that quick. We've got 9 months.
Quick.
They go, usually it's 18 months, but by the time someone makes a decision and, the project and internal politics and having champions assigned to actually train and implement. So that's a key thing. Although, obviously, due to these innovation arms, a lot of those pops are coming quickly, but, it's understanding it can take 9 months to 12 months, and depends on the company's agenda too. Like you could be in the door and then they've scrapped the project. It's through no fault of your own. They've just said, we don't have a budget, or we're pivoting, or a new GMs came in. We've had documents, obviously, from a project background that took 2 months to be signed off.
Yeah, it happens. Not surprising at all. And
the financial year is a very interesting one. So when you hit end of financial year, your project can just go out the door. It's like you could
or it's instantly signed off.
Yeah, or one of the other
one.
Yeah.
Well, we've got budget to burn. Let's just use it somewhere.
Yeah, that's exactly right. It depends where you sit in their budgets. Do we push it through this round, or do we wait another 3 months while we've got fresh budget? That's probably a really good point that you guys mentioned there.
Both happen.
Yeah, and that's through no fault of your own. Like, and you've probably got the person internally saying, "We're ready to go. We're just waiting on the budget." So sorry, it's 3 months now.
Yep. It's a tough conversation to have, especially when you're trying to get that sale, get some revenue in, and you're waiting months and months and months.
If you're working with a corporate, you've got to understand how they operate, and you've got to understand that there's buckets of funding, and they have to pull from the right one at the right time.
Yes,
not just one person making the decision.
That's a very, very valid point. I think the other side is B2C. So, it's how quick your product can get out to a market, your adoption of users, the customer journeys, to how you're going to keep that sticky, for a better word, because you can get 100,000 users, and then how do you maintain them and keep them active? That's probably another point, a tricky area to do.
Continually provide value.
Yeah.
I'm a big fan of B2B. It's a longer process from a buying cycle, but if you get it right, you're in for the long term. B2C, you have to get it very right to keep consumer-based customers for years, whereas B2B, I find it a little bit more not easier. I think you got that big buying cycle, but once you can land in a B2B and if you serve them right, they'll be around for a while. So I think, it's the type of business that you want. Obviously, B2C can scale super fast because there's a little barrier to entry. If it's a $10 a month product, it's very different to 100, 200 grand a year product. It's a very different proposition. But like you said, they're understanding who you're selling to will impact the way you need to project out time. So if it's B2B, 12 months, 18 months contracts. If it's B2C, you can be picking 10, 20,000 people up in a month if you're doing well. So it's a very different proposition.
Yeah, that's exactly right. Definitely that. And again, I mentioned Wadi's a bigger fan of that, enterprise sale into corporate because it's a longer sales cycle, but once you're in there, you're in there for a long time, provided you service them right and you maintain that relationship.
They don't change their decisions quickly, as you would know once you're in there.
Yes, correct. Yeah, well, if you got in there, you've done something right.
Well, no one wants to be that person or that GM responsible for backing out that project or that being that the project that didn't work or that was an experiment.
That's true, very true. So, Mark, that's been a great chat, man. Just talking about what opportunity there are for founders. If they want to come learn about OneLenz, what's the best point to reach out to you? Just jump on your website, or would they catch on LinkedIn? Where would they approach and talk to you?
Yeah, just hit us up on LinkedIn. We're always up for a chat. Obviously now with Zoom and all these other techs that we're all using, just hit us up on LinkedIn, and yeah, we're happy to have a chat. Obviously, we've got a pitch night coming up on August the 10th. There'll probably be about 20 or 30 VCs from all over the globe there, some local, pretty high-profile ones. We're fortunate enough to have the Minister, so Senator Jane Hume, who's a massive advocate for fintech innovation and helping the startup communities especially. She's one of the main drivers behind open banking, so she'll be having a keynote. So there's a couple opportunities for startups. So yeah, just hit us up on LinkedIn or log onto the platform and load your company up and we'll vet it.
No, very good, Mark. No, I appreciate you coming on and sharing your experience so far and all about OneLenz. I really appreciate it.
Awesome. Thanks, guys.
Thanks, Mark.
Cheers, Mark.
Thank you.
Cheers.